Hello and welcome XRP family to another edition of Token Topics. I hope everybody's doing great. We're going to dive into the world of XRP. I'm going to connect some dots for everybody over a UK digital security sandbox. The great news is that they're lightening the load. They're making it easier to experiment and push this forward. But one of the technologies being used behind the scenes is XRP Ledger. I'm going to show you in this video. Also, we're going to go over great news about Ripple launching a native stablecoin on the XRP ledger. I'm going to go over reasons why this is a good thing for the ecosystem and in the long run. Also, I'm going to answer some questions I'm sure everybody's asking. Why is the price on these assets not going up, right? We see a lot of good news, we hear a lot of good news, but what is it actually going to take? You know, we hear about tokenization, all these things, but what is it actually going to take to drive up the price and the value on these assets? So hopefully it's going to answer some questions in this video. If you're an XRP fan, you don't want to miss this, please do hit the like, share, and subscribe. Remember, I'm not a financial advisor, so with that all out of the way, let's go ahead and dive in. If you have not purchased a D'CENT Biometric wallet, now is the time to do so. Through Token Topics affiliate links, you receive an incredible discount, $30 off the original price off the one package. If you do the two package deal, you get $100 off the original price. You can't beat that anywhere. All the information, the purchasing links are in the description. This is a bullish article from NASDAQ. This is bullish for the whole industry, and it just shows us that the party's just starting. When major institutions, including BlackRock and JP Morgan, began to adopt blockchain for tokenizing assets, this not only validated the technology's readiness to transact at large scale, right there, but also altered the market dynamics. It demonstrated a level of trust that can only encourage a wider demand from other major players. Now, I'm not going to go through the whole article, but let's dive in, and the link's in the description. Reasons why this is bullish. Plain and simple. Tokenized funds are and will continue to be a game changer, democratizing access to investment opportunities. By breaking down large assets into smaller, more accessible units, blockchain has opened up markets that were previously out of reach for the average investor. So as you can see, that is why it's bullish. It's allowing for more people to participate. So even more, the scope of tokenization is expanding beyond traditional financial instruments. A wide array of assets, including real estate, art, and even collectibles, are being tokenized, making them more liquid and accessible. Right there, that's another reason why this is bullish for the industry. The level of engagement from various stakeholders that a blockchain is capable of has profound implication. And this is big right here. BlackRock's recent venture into tokenizing a money market fund on Ethereum is a strong endorsement of the viability of public blockchains in supporting new payment rails for traditional financial instruments. As recently as June 2023, BlackRock declared institutional DeFi as being many years away. Now with the launch of BlackRock's USD Institutional Digital Liquidity Fund, we're seeing firsthand a case study in how to integrate stability of traditional financial assets with the efficiency and transparency of blockchain. Another reason this is great is institutions bring innovation, not only capital. The capital is great, you know, we're here to make some money, but as there's more innovations, that will in return probably bring in even more capital. So while offering a degree of security and control, permission and private blockchains inherently come with limitations that can stifle broader innovation and integration. These systems often operate within confined networks, which, although secure, also hinder interoperability with other systems, limiting the scope of asset tokenization and the exchange of value across platforms. Public permission blockchains tap into tremendous liquidity potential right there by allowing anyone to participate, innovate, and transact within a transparent and secure framework. This openness has fostered a rich ecosystem of applications and services, driving competition, innovation, and efficiency. However, until recently, this ecosystem suffered from fragmentation between different blockchain scaling solutions. Let's dive into this article, and I want to explain that this is bullish for not only Quant, but also the XRP ledger. I want to connect some dots here. The Bank of England, we know that Ripple has worked on proof of concept with the Bank of England. The England and Financial Conduct Authority, or FCA, initiated a consultation regarding the UK's 5-year digital security sandbox. This initiative is designed to foster innovation by temporarily easing the requirements for central securities depositories, or CSDs, enabling tokenization experiments with distributed ledger technology for digital securities trading and post-trade. This sandbox is a pivotal opportunity for innovators and financial institutions to explore the benefits and capabilities of DLT in a controlled, regulatory compliant environment. The goal is to foster robust, efficient, and more transparent securities market that fit for the digital age. Relaxations mainly impact CSDs. Participation and open to 3 types of entities: CSDs for digital securities depositories, DSDs, trading facilities or hybrid infrastructures. Trading infrastructures rules remain the same, but the regulations for CSDs are significantly relaxed within the sandbox. A critical area of interest is the potential volume limits for trading and issuance. The European Union's introduction of the DLT pilot regime was met with skepticism by major players due to restrictive activity ceilings. Although the UK pledged more adaptable limits, in some instances they may be significantly lower. The limits are there for a purpose to ensure financial stability while rules are laxed. Unlike the EU, which sets limits at the infrastructure and entity levels, the UK proposes a market-wide limits to be shared among institutions. So basically, the institutions are on the same page. Therefore, the more participations involved, the tighter the restrictions on any single institution. The imposed limits might seem generous if the DSS encounters the same lack of popularity as the DLT pilot regime. Well, let's connect some dots. Who was working with the DLT pilot regime? Now, people are talking about this being bullish for quant. I'm going to connect some dots and show you why this is bullish for XRP holders too. Ripple's been working on this technology behind the scenes. So even though that article doesn't clearly state what blockchains have been working on that, keep in mind it's a consultation paper for a 5-year sandbox that has been going on. So this is an article from last year. We know that even though the EU DLT pilot regime is not favored because of their restrictions and their tough rules, they are working on this, and this is a fact. So the EU DLT pilot regime, in an effort to cater to market infrastructures, engage in trading, settling transactions involving digital assets, the EU Commission has introduced an innovative pilot regime. This revolutionary approach establishes a controlled environment akin to a sandbox, providing temporary exemptions from existing rules. By granting regulators the opportunity to gain hands-on experience with distributed ledger technology within the market infrastructures, the DLT pilot regime aims to ensure robust investor protection, safeguard market integrity, and fortify financial stability. The Axiology Project. But the Axiology Project is a collaboration between Ripple and SuperHow. Axiology is a tokenized securities trading and settlement system, DLT TSS infrastructure. This infrastructure enables multiple layers of the current capital market infrastructure to coexist on one technology layer, leading to multiple synergies, process efficiencies, and new business models. This collaboration aligns with Ripple's commitment to driving innovation and advancing the adoption of blockchain technology in the financial industry. Built on the powerful technology of the XRP ledger, the Axiology project showcases yet another tangible real-world business application for tokenized and digital assets on the XRP ledger. Same business as usual. They're just lightening the restrictions with this new sandbox. The new digital security sandbox reshapes how we regulate, allowing firms to test regulatory changes using real-world situations before these changes are made permanent. See, this is great news for Ripple. Relaxation of CSD rules also extends to banks, allowing them to operate within the sandbox under the same legal entity as their commercial banking operations. With all this tokenization talk, I get asked, why are we not seeing the price of these assets going up? What's really going to drive up the price of these assets? All this great news is awesome, but when are we actually going to see the value increase? So how tokenization will impact the value of digital assets and cryptocurrencies. This is a topic that's not really discussed enough. Tokenization has the potential to significantly impact and drive up the value of digital assets in the crypto market in several ways. Increase liquidity. Tokenization can fractionalize ownership of assets, allowing investors to buy and sell smaller portions of assets. This increased liquidity can attract more investors to the market, potentially driving up demand and prices. Accessibility. Tokenization can make traditional illiquid assets, such as real estate, fine art, accessible to a wider range of investors. This increased accessibility could lead to greater demand for the assets, potentially driving up their value. Also, diversification. Tokenization allows for the creation of tokens representing various types of assets, from real estate to stocks, commodities. Investors can diversify their portfolios more easily by holding tokens representing different asset classes, potentially reducing risk and increasing overall value. There's also efficiency. Tokenization can streamline processes such as trading, settlement, and ownership transfer, reducing costs and increasing efficiency. This improved efficiency could attract more investors to the market and contribute to overall growth and value. Global market access. Tokenization can facilitate access to global markets by removing geographical barriers. Investors from anywhere in the world can buy, sell tokenized assets, potentially increasing demand and driving up prices. We also have regulatory compliance. So properly regulated tokenization platforms can attract institutional investors who may have been hesitant to enter the crypto market due to regulatory concerns. The influx of institutional capital could contribute to increased demand and higher valuations. Also, innovation. Tokenization opens up possibilities for new types of assets and investment structures that were not feasible before. This innovation could attract more investors to the market and drive up the value of digital assets. However, it's important to note that the impact of tokenization on the value of digital assets in the crypto market will depend on various factors, including regulatory developments, investor sentiment, technological advancements, and market dynamics. So it needs to attract, I just want to stop right there, it needs to attract big investors to come in. What we're seeing right now is a drop in the bucket. We need increased liquidity. We need more people involved, and during that process, more people are going to hold assets. So while tokenization holds promises for increasing the value of digital assets, it also presents risks and challenges that need to be clarified and navigated. So there you have that. This is an excellent article from Daniel Radwanski. Why are institutional players good for the tokenization market? So the strategic digitalization of assets spearheaded by institutional adoption is transforming the landscape of asset management and investment strategies. Tokenization technologies and blockchain integration are breaking down traditional barriers, allowing new foundations to be laid how assets are managed, traded, and held. Financial institutions are spearheading this revolution, embracing tokenization technologies as a comprehensive strategy to navigate the complexities inherent in digital assets. The commitment to change and innovation is indicative of unique capabilities that blockchain technology offers, enhancing transparency, efficiency, and accessibility across financial services. The critical role of digital currencies and tokenized assets is its transformation. In this transformation cannot be overstated. With institutional capital moving into digital forms, the liquidity pool within the tokenization ecosystem is poised for expansion. Right there. That is big right there. The increased liquidity, increased expansion. The introduction of central bank digital currencies and other stablecoins into this mix promises to accelerate this transition by bridging the divide between traditional financial systems and the burgeoning world of digital assets. These innovations are poised to streamline the flow of capital, enhancing efficiency and further boosting liquidity in tokenized markets. Again, crawl, walk, run. We've heard that from like Brad Garlinghouse and a lot of other people in this space. We're going to get there, and we're going to hit a turning point where we're going to see a lot of these big enterprise businesses getting involved, and we're going to see a big rise in these assets in a short period of time. We will get to that point, I believe. Investors in the XRP should know the ins and outs and the ups and downs of Ripple's new stablecoin launch. Now, this is a long time coming. A lot of networks working on similar solutions actually have a stablecoin, and this actually makes sense. So let's dive into this Ledger Insights article. So just the other day, Ripple announced it plans to launch a US dollar stablecoin at XRP Ledger and Ethereum blockchain. It will be a high-quality stablecoin backed by short-term treasuries, cash, and equivalents. This makes tremendous sense for Ripple as a company. For investors in XRP, it could be a neutral to negative, with the reasonably stable XRP reinforcing that perspective. Now, some people might actually argue that. I kind of see it as this could bring in a lot more. When you're scaling for a mass population to use, it makes sense for you to have a stablecoin because it's going to give people different options. So why it makes sense for Ripple? Ripple has cash, and apart from XRP, has yet to produce a money machine. Hence, its expansion beyond using XRP as a bridge currency for cross-border payments has continued pace. In the last couple of years, it has launched a CBDC consultancy, acquired Medico, the bank digital asset custody technology firm, and more recently acquired Standard Custody and Trust. The acquisition of Standard Custody and Trust with New York Trust Charter likely met a couple of objectives. If real-world assets or RWAs are to take off, they require custody. In some cases, trust companies will need to lock and hold the digital twin. Stablecoins are really the first type of real-world asset to take off at scale. Standard Trust can act as a trustee for the stablecoin reserves. Ripple's specific stablecoin use cases. So Ripple highlighted specific benefits for its own stablecoin. These include helping with global on and off ramps for cross-border payments. In some jurisdictions, clients might prefer to hold on to dollars rather than convert to less stable local currencies. Additionally, Ripple mentioned that stablecoins are the entry point for legacy financial systems to connect to the world of decentralized finance. It's excellent. I also want to add that a lot of people that are using it, when they decide to put it into a stablecoin, they put it into a stablecoin anyway, whether it's got to be on a different network. So it continues here that Ripple points the Bernstein forecast that stablecoins will grow to a market capitalization of $3 trillion within 4 years. Wow. A stablecoin impact on XRP. This later point about too many cross-currency exchange rates is a concept underpinning XRP rather than having many cross-currency rates between thinly traded currencies. Each one just has a rate against XRP, the bridging currency. However, historically, the US dollar has played this role, so perhaps with a stablecoin, some might choose the stablecoin for bridging. Hence, on the face of it, it could reduce the role of XRP. However, if the stablecoin increases the utility of XRP ledger, that could be good for XRP. A few months ago, Ripple CEO Brad Garlinghouse answered this exact question about the stablecoin versus XRP as a bridging currency. He states that, "I see stablecoins as a complement or even acceleration to what Ripple is doing at its core," Garlinghouse stated. Think about this, if the recipients, they want something else, you still need a bridge. Debate about that a while ago, and David Schwartz chimed in, and he stated that you still need a bridge. Whether you're sending a CBDC stablecoin from one institution to another across borders, if it's going to settle on something else, you still got to use a bridge. Garlinghouse continues, stablecoins address a single currency. So if you're just using a domestic use case, stablecoins can be a great solution. If you're cross-border, having a bridge currency versus a stablecoin has some advantages. He argued that significant effort has gone into building liquidity between XRP and various fiat currencies through a single API. Well, those would be stable too. So he's given an example that this is actually complementary and it's actually going to be beneficial. A lot of great things to look forward to for XRP fans that should come out of this Paris Blockchain Week. So Paris Blockchain Week kicks off next week and marks one of Europe's biggest blockchain events. For users, developers, and leaders, XRP Ledger community, here's what to expect. So Leadership Insights Paris Blockchain Week brings CEO Brad Garlinghouse to the stage for a fireside chat with XRP Ledger Commons President David Bichiri. Don't miss a discussion packed with insights on the future of finance and how Ripple and XRP Ledger together can deliver real-world utility. That should be exciting right there. Exploring mass adoption. Join Eric Van Miltenberg and Marcus Infanger as they delve into the challenges and solutions for mass adoption of blockchain technologies. That's important. Discover strategies for overcoming barriers and redefining traditional financial systems. Showcasing innovations. Participate in XRP Ledger-sponsored hackathon. at Paris Blockchain Week 2024. That should be pretty cool. So if you're a developer out there, you're a business with some developers on hand, showcase your skills in tokenizing real-world assets on XRP Ledger, win prizes, and explore growth opportunities within the XRP Ledger ecosystem. See, it's the connections that come out of this, the networking, that is going to be beneficial for the ecosystem. So networking opportunities, connect with the XRP Ledger, mentors, developers, and industry experts at workshops and mentoring sessions. Gain insights into XRP Ledger advancements, practical applications, and business opportunities. Pretty cool. I hope you enjoyed the content. If you did, please do consider subscribing so you could stay up to date with future videos on not only XRP, but other great blockchain projects. Take care.